NTT has a selection of businesses. It's got the mobile business document, nothing wrong with that. It's got a few other businesses. They look okay. It's got a landline business in the stub, which is dull, but it is valuable. Point is, you're getting that business, getting the stub on a price to book of 0.12. So you're paying an eighth of book. And that, to me, suggests the market thinks there is no future there, that those assets might as well be written off. I just don't think that's the case. You are getting a stock with a dividend yield of around 4%, amply covered, earnings are pretty stable. You've also just had an announcement of substantial share buybacks. NTT has been buying shares that are held by the government up until now, but the government is down to the minimum which it's allowed to hold under the current NTT law. So they're instead buying back shares in the market. Very sensible thing for a mature company to do, in my opinion. They are also paying down debt. I'm not convinced this is such a good use of money. I'd rather they send the checks to me, but because I think they're already under-leveraged. But it just underlines the defensive nature of this company. They will, on current trend, have no debt within another 7 or 8 years. And demographic dividend, I'm not sure I've mentioned this, but I've been looking at businesses and saying sales aren't really going to go anywhere. In fact, I think sales growth will be negative on the landline businesses, but there's no reason that profit growth has to be negative as well. One of the advantages they have is that they currently employ a lot of expensive managers in their 60s, and some of them can be replaced by much cheaper hires, and some of them, when they retire, don't need to be replaced at all. And this suggests to me that recurring profits should be a couple of percentage points above sales growth for maybe the next 5 or 10 years. So the demographic dividend, they are also doing pretty shareholder-friendly things. I think for a mature company generating a lot of earnings, it's always a worry. What are they going to do with those earnings? Are they going to waste them? Well, you know, there's a maybe on some of the foreign acquisitions, but I'm prepared to give them the benefit of the doubt, largely because the acquisitions are modest in scale. They're certainly not sprints. And the other uses of capital all seem to me to be highly sensible. They're reducing capex from 20% to 15% of sales. They're halfway through that process. They give me a strong impression of a company which is being managed in a sensible, defensive manner. It is not trying to shoot the lights out, but it's just trying to make money for shareholders, and that is something I like. But the bottom line, and the reason I picked NTT rather than some sort of more exciting undiscovered small cap, is that although you can find companies on lower price to book or price to earnings, it's extremely hard to find one which is as far out of line with its peers. That's what makes NTT outstanding to me. Most defensive companies trade at a substantial premium to the market. That is true, I think, in every other sector. It's only in the telecom sector that you find the most defensive company trading the cheapest. To me, that is the decisive argument in favor of NTT.